Hello, welcome to another episode of Test, Optimize, and Scale. We've been looking forward to today, episode 2 with Will Ford, President and Co-founder of LaunchBoom. Got to tell you, they've launched more campaigns. They're doing more right now than any other agency on Kickstarter and Indiegogo. Their portfolio is unlike any group there. We had a lot of positive feedback from our first episode, so wanted to book today's time to speak with you guys about transitions from reward crowdfunding to equity crowdfunding, all different paths that founders could go down. Will, thanks for joining us today.
Hey, thanks for having me on again. I'm really excited to be here today, and I can't wait to dive into this topic because over the years, since we've been building LaunchBoom and really focused on launching these massive reward-based crowdfunding campaigns on Kickstarter, on Indiegogo, we're starting to see more and more of our clients transition away from Kickstarter and Indiegogo once that campaign's complete, and then have tremendous amounts of success launching through equity crowdfunding platforms like WeFunder, like Start Engine. And it's really interesting seeing the trend with equity crowdfunding start to really take off. You know, I'd say ever since the SEC increased that minimum crowdfund from, $1,070,000 to $5 million, we're seeing more and more traction there. We're also seeing much bigger campaigns, which is exciting on the equity crowdfunding side. So yeah, really excited to dive into this topic today.
Absolutely. And do you want to go into your history a little bit? I know you did so on the last episode, but just for any new listeners, I want them to understand the magnitude of what LaunchBoom does, average campaigns, the process on how you validate these, because I want to talk about the roadmap a little bit of when a founder comes in, what they do in terms of planning for reward crowdfunding, but wanted to start with your portfolio.
Yeah, so just to kind of take everyone back to the beginning, I'm a serial entrepreneur. I've launched multiple businesses from the ground up. I've had some great wins. I've also had some epic failures like other entrepreneurs out there, and it's probably those failures I learned the most from that have really led me to where I am today here at LaunchBoom. But the main reason I started LaunchBoom was I was looking for a LaunchBoom to help me when I was launching my own crowdfunding campaigns on Kickstarter, on Indiegogo, and they just didn't exist. At the time, and actually for the most part, Kickstarter and Indiegogo have always been more focused on building their backer community, providing the best experience to their backers, and they weren't really as focused on supporting the entrepreneurs. So for a lot of people out there, if you haven't ever launched a product on Kickstarter or Indiegogo, these platforms are actually relatively still in their infancy. I mean, they both opened their doors in 2008, 2009. So we're just over 10 years old when it comes to Kickstarter and Indiegogo. And in the early years, it was really easy for creators, campaigners that had really cool product ideas to just create a campaign page and go live. And they could raise hundreds of thousands of dollars, if not more, in pre-sales. Now, what happened after more and more projects continued to succeed, smarter business owners and entrepreneurs saw the opportunity and they all came rushing in with their products. So the landscape became super competitive back in 2014, 2015, which is why I started LaunchBoom. I wanted to create an agency that was more focused on supporting entrepreneurs and helping them set up their projects so that when they do launch, they can have these massive pre-sales. They can raise hundreds of thousands, if not millions of dollars. And so over the years, we built a massive team here at LaunchBoom. We've also built systems so that we can actually further mitigate their risk exposure on all of these products that they're thinking about launching. So what's really interesting about where we are today at LaunchBoom is we've got a program where we actually do the heavy lifting first. We spend about 60 days figuring out the messaging, the positioning, finding the demand through Facebook, through Instagram advertising, and then understanding the realistic nature of what that launch is going to look like before we actually even have them commit to partner with us on the actual crowdfunding launch. So the reason that's so important is everyone out there, today we've got clients in 50 countries outside the United States, and every day I talk to creators worldwide, and they all have the same question. They're like, Will, I want to pre-sell $1 million or more of my product through Kickstarter, through Indiegogo. How much money will it cost me to get there? And at the end of the day, do I make any money? And again, I tell everyone the same thing. Whoever tells you they can do that before doing any testing, they're lying. There's no way to know. Even if I've launched a dozen products in a certain vertical and done $1 million or more, I still don't know if I can do that with your product if you're in that same vertical until I do the testing first. So the testing portion of what we do at LaunchBoom is, in my opinion, the most important work we do, because we're really helping our clients fail fast and fail cheap. So what that looks like is we take them through our messaging process, we look at the positioning, we then have them send us their prototypes, and we have our own studio here at LaunchBoom called LaunchBoom Studios, where we do all the photography, create the assets we need to build higher performing Facebook, Instagram assets. And then our web developers come in and they build a series of lead funnels and reservation funnels so that we can actually start to build higher quality audiences, much more focused, much more qualified, that are more realistically going to convert into a sale when we do launch the Kickstarter or the Indiegogo campaign. So the beauty of our system is we spend 2 months doing all this micro testing until we have more than enough data to show our clients what the return on ad spend is going to look like, taking it from a test into a LaunchBoom. And what we're really looking for there is like a 3x or greater return on ad spend. That's usually what they need to see in order to make money on these campaigns. But I always tell everyone, Jason, you're not going to get rich on Kickstarter or Indiegogo. It's not the reality. Really what Kickstarter and Indiegogo, the way we use them and leverage them, it's really to generate the largest volume order possible so our clients can place the biggest order with their manufacturers, because with economies of scale, they usually get much more competitive price breaks per unit, so it helps them get a better profit margin. And if we can get the pre-sale up front, get all that money in their bank account ahead of time, now they've got the comfort and confidence to place that bigger order because they can afford to pay for it, because now they have real customers waiting to receive the product. So it really is a smarter, much better way to validate demand, generate thousands of early customers in a quick amount of time, and then get the support they need to manufacture and eventually deliver to those backers. So here at LaunchBoom, the reason I named the company LaunchBoom, it's what I call the LaunchBoom effect. After that test is done, we then take them into a pre-launch process where now we use the data from the test, now that we know where the demand is, now we can make a data-driven video that's going to allow us to convert more traffic into backers when we're live. So we don't make the video until after the test boom's done. And then once we're done with the test boom, not only are we making a video, but we're doing a massive ad expansion focused on those audiences that are already converting really well from the test. The reason we do that is because we're taking bigger budgets, and we spend about another 2 months after that test, building a massive pre-launch audience. So we're looking to build tens of thousands of leads. We're trying to collect thousands of paid reservations. So when we go live, we have a LaunchBoom effect where we get the entire campaign funded within minutes after we launch. That's really important, mainly for 2 reasons. One, when you get the project funded immediately after launch, Kickstarter and Indiegogo, they see the project doing well, they're going to start promoting it. They're going to give you much more exposure to their organic audiences, which are in the tens of millions of backers monthly that are going there looking for these projects. So that gets us a massive lift with more backers that we can bring into the campaign. The second reason it's important is when backers see a project funded, they know it's going to get manufactured and delivered. So now there's higher backer confidence there, which also makes it easier for my team to convert more backers every day we're live once we're funded. So that's how we drive these hundreds of thousands, if not millions of dollars in campaign outcomes for all of our clients. And I'd say the best part about where we are today, Jason, is the fact that we have a 100% success rate. Why? Because we're doing the heavy lifting first. We're minimizing their risk, all of our clients' risk exposure, by testing first. And then we only commit to a launch when we can show them what the outcome's going to look like. And then we can help them reverse engineer the numbers and understand what their profit margin will be per unit we move through the crowdfunding system. So it's all data driven at this point, which allows me to sleep a lot more comfortably at night.
I am a data guy, and that's why I'm such a fan of your guys' model. Also, what you're speaking to, that's why I love crowdfunding. We're on the line with founders on a daily basis, in some cases before even equity crowdfunding, and they're trying to figure out how to take their company off the ground. Those stages, we're generally providing more recommendations than anything else, but it's such a clean way to launch a company. Like you said, you're building the audience, tens of thousands of different signups, of different leads through your funnels. You're working off the analytics. we'll have some assumptions coming into campaigns, but we need the analytics to tell us what's working. So again, that definitely resonates with everything that I see. You guys take it so much further as you're then looking at manufacturers, costs, how you could bring those down with the economies of scale. You're able to show the social proof on these campaigns and build backer confidence. There's a stat of the percentage of campaigns that never deliver on Kickstarter and Indiegogo. I don't want to misquote it, but I think it's somewhere around 75%. Maybe it's a bit lower today. So the fact that you guys are vetting different groups, giving them the capital, giving them the dollars that they need to place this with manufacturers and ensure a product for their backers is huge, monumental at that. And you hear things like 100% success rate, and sometimes there's skepticism. For any listeners, I want to explain that a little bit. Because of your test model, you know which companies can successfully hit their goals. If they don't, you're going back to the drawing board. I love how you have data-driven video, and you're able to shape things, test some other things out, and get it to a point where it is going to be successful. You then only go live with the campaign once that's in radar, once the analytics, once the metrics are telling you that. And the ability to hit the campaign goal in a few hours, even just day one on a consistent basis, is a massive deal. I want to really emphasize that to everyone here. When looking at best practices on Kickstarter, Indiegogo, they all tell you it comes down to day one. You guys are taking that to a whole another level, hitting the full goal in many cases in the first few minutes, first few hours. And that's all a result of the process. That's all a result of that data focus.
Yeah, I mean, man, you should come work with me at LaunchBoom.
I preach it, just to add their will, and similar to what you said, because of failures and because of failures that I've seen with other groups. It's no fun to be on the line with an entrepreneur when they're shutting down their doors. So we strive to great levels to be good problem solvers. And when I hear these systems, it's like you said, like not everything works. We've had to shape these, and to have a stronger success rate means the world for those dynamics, for those relationships, for those goals.
Yeah, and just to kind of back up a little bit, I mean, the real reason I love what we're doing at LaunchBoom is being an entrepreneur. I've used the traditional model before crowdfunding, where I had to figure out manufacturing and tooling. I had to place the largest volume order that I was comfortable placing, and then my marketing plan better work. Otherwise, I'm a guy stuck with a bunch of product I can't move, and I'm upside down before I even get started. And I've actually been there, Jason, and it's no fun at all. So really what I love about our agency model, especially TestBoom, that 2-month test period, is that it really does allow entrepreneurs to get a tremendous amount of data to really understand the likelihood of that product succeeding in the consumer marketplace before they have to go hard on it and put real money into it. So for me, it's like, I wish I had this system 10 years ago when I was launching my own products. I wish I could reversing roles for a minute. I wish I could say, hey, Jason, here's my prototype. In 2 months, tell me whether or not I put more time and energy into it. It's really that clear. And so what we're really doing through that test program is we're truly allowing all of our clients to fail fast and fail cheap. And a reason I say that is because it's true. Like everyone we talk to that comes into LaunchBoom, especially like first time product creators, they're so excited. They come in with the most beautiful, everyone has the most beautiful baby, right? And they all think they've got this like multi-million-dollar idea. But the reality is that we don't know until we actually run some tests and look at some data. And the beauty of our system today is that there's no emotion involved. I remember in the early years when we first launched LaunchBoom, I would look at some ads that my ad team would build, and I'd be like, that ad is horrible. I love the way this ad looks over here. And then when we'd start the testing, the ad I liked best would be the worst one. And the ad I hated would be the best one. Why? Because I wasn't the demographic they were targeting. Right? So the beauty of our system is that based on our messaging and positioning process, it allows us to kind of remove that emotion to just really purely look at the data and then let that data drive the rest of the process and the funding behind it.
Absolutely. And we actually just had an advertising creative meeting I got out of before this discussion. It's all about the audience. It's all about what they're going to respond to. I think you guys even go in depth with surveying audiences and creating creative that they want to see based on answers that they're providing. And that makes the world of difference. Going back to the analytics, going back to the data, what you said about creative, it can be tough to determine, hey, what campaign will work? What ad creative will work out of the gate? Again, there's assumptions in the analytics. Setting up the right test so that the numbers then allow for you is such a more consistent way to go here. I want to add one more note on the signups, the leads that you guys are getting. Some people think, hey, I have a few hundred people that I know, I'm going to get a few hundred backers, or I have 5,000 email addresses of people who subscribe to my company's email newsletter. I should get a good amount of backers. We've seen low conversion rates for other forums. Let's say it's for equity crowdfunding and different crossovers there. I would play off average internet conversion rates. If you're seeing a 2% conversion rate, if you're seeing 10,000 email addresses convert to 200 backers in day one, that's not bad. I know you guys have different stages of email, different stages of intent, so you get much higher conversion rates. But I want to just paint that picture for anyone who has not done email marketing before and is anticipating too strong of a response. And it's why it's so important that you guys are building the audiences before the campaign ever begins.
Yeah, Jason, let me elaborate off that, because you bring up a really good point. Like, we do have a lot of like super green first time product launchers come into LaunchBoom, and they come in exactly with that story. Hey, Will, I've got 100 family and friends that are going to buy my product, and they're like, we could probably like fast forward your process and launch sooner. And just to speak to that for a minute, because it's really important. Yeah. We have big successful companies come to us with tens of thousands of customers already buying their products. And when they come to us with a new product, we still take them through TestBoom. Because because those customers have already bought one or more products, we still have to convert them again through our funnels to get them excited about the new product launch. And to give like everyone listening just a general idea of like the size of audiences you need to actually make a splash on Kickstarter, on Indiegogo. For us here at LaunchBoom, we have two funnels. We have a lead funnel and a reservation funnel. So the way this works is, if I'm targeting you on Facebook and you see an image of the product that we're getting ready to launch, and you're like, that's cool, and you click on it, we're going to redirect you to a landing page. That's called a lead funnel. And our web developers are going to design actually multiple landing pages. We're not going to build one. We're going to build maybe 2 or 3 to start. It's called split A/B testing. And we're going to showcase different images, and we're going to test different call to actions. So what we're going to do is, if you're out there listening and you click on my Facebook ad and I direct you to my lead funnel, you're going to see some more images of the product. It's a very simple layout, but then we're going to have a call to action, something like join our VIP community, get a special discount before we launch our campaign. So all we're trying to do is get people to opt in by submitting their email. Once they do that, that becomes part of our client's database. We now have legal permission to email market back to them and convert them later when we do launch. The only difference is we don't like to wait. We're impatient here at LaunchBoom. So we try to convert them the same time. So as soon as they opt in, we then put them into a reservation funnel. They don't even realize they're going into this funnel. But the first thing they'll see is something like, thank you, Jason, for your interest in our product. Please know that the first 1,000 backers are going to get a lower price and even earlier delivery than everybody else. So if you're interested in securing the best deal today, before we launch, all you have to do is pull out your credit card and place a $1 money back guarantee deposit. And again, it's not the dollar we care about, it's the transaction. It's the consumer purchase intent. Because consumers don't do that if they're not serious about buying a product. So what's happening here is we're building a lead funnel and a reservation funnel. So let me now explain like the size of these audiences that we build and create before we're comfortable launching. We usually like to have our lead funnel at 10,000 or more people. And those leads can cost somewhere between $1 and $2, just depending upon, metrics and data. Hopefully lower than $1, but we don't really know until we get in there. So you've got 10,000 leads. Now the reservation funnel is the most important funnel and metric we look at, because that's going to be your best audience. That's going to be your highest conversion. We usually get a third or more of the reservation funnel to convert into backers when we launch. So we're trying to get, maybe a few thousand of these reservations before launch. So for example, if we have 3,000 reservations, we know that we're going to get 1,000 or more backers when we do go live. Now, to give you an idea about the leads, guys, the leads are only going to convert at maybe 3 or 4%. So if I have 10,000 leads, I might get 300 or 400 sales, right? So the lead funnel, the reservation system that we've developed here, it's how we're building much more qualified, the most qualified audiences you can build to support these Kickstarter Indiegogo launches. And that's why we get these big launch booms. And then obviously we set very conservative campaign goals. Our campaign goals are usually 20 to 50 grand. And that's predicated on the pre-launch data that we know will convert when we launch. So when we send out that first email blast after we go live, that's why we're easily able to get these deals funded very, very quick. So that's, again, the LaunchBoom approach. Now, there is one more important thing. There's actually a lot more here, but I don't have time to get into it today. But a lot of our clients who come in with their prototypes, they also don't really know how to price it to the consumer. Right? They we do the market research for them. We'll show them what the landscape looks like. But a lot of them will come in saying, hey, I think I can sell this widget for $100, right? So part of the reservation funnel system is we actually do price testing. So we'll test different lead offers to see what's converting the best. And if you're listening out there, if you don't get a good metric or conversion at a certain price point, it doesn't always make sense to lower the price. Sometimes we do have the assets that justify a higher value prop for the consumer. So we can actually increase that average order value and sometimes get even better conversions on a higher price point, which really helps our clients get much, much fatter margins, which they love. So we're doing all that work through the test. So by the time we get through the test, we know exactly where to price this thing. We know exactly what we're going to be able to raise and then how much additional ad budget we need to hit those bigger numbers so that our clients get the volume orders they need so they can get the best profit margin possible with those economies of scale when placing those orders. So I hope that gives some more clarity there. When people come in and they say they have like 100 family and friends, I tell them, please don't rely on 100 people. It's
good
you're
advice.
going to be a little deflated when you go live and you only raise a couple grand.
Sure. And if you invited those 100 people to a barbecue that afternoon or even an event 3 months later, how many are actually going to come? There's always a conversion rate, even if it's high. Play for higher volumes. And if it sounds like I'm a huge fan of what you guys do, it is, but really because of the science behind it. These are excellent recommendations for anyone who's listening in. I, of course, would always work with experts, the people who are doing it. They know when a campaign's working. They know when it's not. But that's what I really hear in these processes. Hey, we tried just the leads. We found out, 3 to 4%. We then put in this whole new model for reservations. Only $1, but something about the connection to the brand opens up, and then we're seeing a third or more in terms of conversion rate. That's very valuable. That's the difference from a successful campaign or one that just hits its goal and one that can do exponentially more. Because that's when people are most attracted to it. When you have that backer confidence, when you have that social proof of, hey, this is something that's of interest to people. It feels like that line around the block. That's what you're creating in day one with these campaigns. And then I like how your model progresses. I don't know if we want to skip past crowdfunding just yet, but how your model progresses to scale. Yeah. So, you've done the test, you've done the launch, maybe going through some of the steps for the live campaign itself. But I want to show how it goes beyond that 1 month campaign and really sets the ground for high growth for a founder, high growth for an organization, what those lead funnel and reservation funnels look like post-campaign.
Yes. Yeah, we can dive into that for a few minutes. So once we get everyone listening, the real reason I believe Kickstarter and Indiegogo to be so valuable is because you can generate thousands of early customers that will be super loyal, especially if you deliver on schedule and it's a good experience. They'll buy all your next products behind the first one. But the reality here is Kickstarter, Indiegogo, it's the best way to get thousands of early customers and to be able to get enough capital without giving up any equity so you can place a larger manufacturing order, get the product delivered, and out to those thousands of early backers or customers. So that's how you can launch your brand with much less risk without giving up your equity too early. right? Because what I haven't told you guys about yet is I had some early companies I built where I sold equity too early. I had a big exit. And then at the end of the day, I made the least amount of money compared to my investors because I didn't understand my value before I started raising capital and giving up equity. So what I love about reward-based crowdfunding is it really allows you to kind of not only like validate demand, but generate a lot of revenue early on pretty quick, where now you can place that manufacturing order and deliver it. Now, once that product is landed and you're now ready to keep scaling your business, a lot of our clients will then transition over to our e-commerce division, where we'll custom build on Shopify if they don't have their e-com already in place. And then we have a whole entire team there that allow them to continue to scale faster. So to give you guys a high-level overview of what this looks like, if we take you through a Kickstarter or Indiegogo campaign and we do a $500,000 pre-sale, that's great. Then after that pre-sale, we can normally do about 10 times the amount of revenue within the first 12 months of turning on the ScaleBoom, the e-commerce program that we build and manage. And the reason why is because all that learning from the testing, the pre-launch, the crowdfunding, that all translates very smoothly over to the e-commerce side of our team. And we already have months and months of experience. We've managed tens of thousands of dollars in ad budget. So we've got a lot of intel. We know who we're targeting. So when we transition over to e-com, now we just do another massive ad expansion based on the audiences we know already want to buy the products. And now we have a much more aggressive marketing plan and strategy and calendar over a 12-month period. But the beauty of the e-commerce side is that now we can also not just advertise on Facebook or Instagram, but now we can hit multi-channels, being we can run SEO, we can do YouTube advertising, PPC. So like there's so much more we can do on the e-commerce side with scaling bigger budgets and scaling businesses faster. We have some clients on the e-commerce side that went through crowdfunding and did well, and then went over to e-commerce, and right now we're doing $1 million a month in sales for them. It's awesome.
Huge. And like I mentioned, talking to a lot of the same founders, to be able to take them through the test process, get the numbers, be able to use that very effectively in the crowdfunding campaign, and then take that momentum, all that marketing value as well too, because it speaks very loudly when your product is so well received in crowdfunding, and then be able to build off it. And again, the only way to measure is with numbers. You're showing, hey, we're doing millions of dollars for these organizations, and all from the crowdfund campaign, all from what we built, and continuing to do that at scale, incorporating more channels, incorporating longer content calendars, and just more depth to the brand itself, and produce higher orders all the way through.
Yeah, totally. And so it took us about 7 years since we started LaunchBoom to get to where we are today. But we've got a super tight process, system, and team on the crowdfunding side. We've got the same type of team on the e-commerce side as well. So now we can add more value to our clients and really add more value longer, not just for the crowdfunding campaign, the launch, but also helping them continue to scale. But what's really interesting is what's happened this year. Like I said earlier, Jason, like when the SEC expanded that minimum round from $1,070,000 to $5 million for non-creditors and for non-credited and credited investors, it really has become a major game changer. So what I mean by that is a lot of our clients at LaunchBoom that have gone through our test, launch, scale program that want to continue to accelerate their growth, to get way in front of their competitors and continue to grow faster, now that's the right time to go sell equity, right? Because now you've done the hard part. You've done the validation. You've proven that you can scale revenue. So now take that story over to a WeFunder, a Start Engine, there's Republic, there's a lot of these equity crowdfunding platforms, and now you can get a much more favorable valuation. You can raise way more capital faster and give up much, much less equity. So you keep control the whole way through of your business. And so what we've already seen and experienced here at LaunchBoom are clients that have gone through our test launch scale program that head over to equity crowdfunding. And over the last year, it's been amazing to see on our side because, for example, like a great client of ours called GoSun. GoSun, they've launched multiple Indiegogo campaigns. They've got these super cool solar products, eco-friendly products that have done so well over the years with us. They've also been scaling really well on the e-commerce side, and they've taken their story to Start Engine. And they've been able to raise huge amounts of capital there. And they've also seen a massive conversion on the backers from Indiegogo. So all these crowdfunding backers from Indiegogo that bought their first few products, and their e-commerce clients that have been buying products and having good experiences that really believe in the brand, what we're seeing is when they go over to Start Engine and they launch there to go start to sell equity at a much higher valuation, giving away much less equity, continuing to keep the majority of their business, they're getting so much conversion, repeat conversion from their customers. Because these crowdfunding customers are super loyal, especially if you deliver on schedule and a good experience. Now they'll dig into their pockets deeper because now they can legally become investors even if they're not credited investors. So it's like you get an even better return from those ad dollars and marketing dollars that were invested during the Kickstarter Indiegogo, because we can convert again on WeFunder or Start Engine. So we've seen this over and over again over the last year, and we're seeing more of it, which is why when Jason reached out and was like, Will, let's do another one of these podcasts, I was like, well, let's talk about what's happening right now, the real opportunity for any entrepreneur out there that does need capital, that does want to accelerate their growth faster. Because if you're not taking a serious look at the equity crowdfunding, you're missing a great opportunity. And the reason I say that isn't just because it's true, but I've also been through the ringer over my career. I've raised money from angels. I've raised money from VCs. I've used debt, convertible notes, safes. Like I've been through the gambit when it comes to funding various businesses that I've led. And the truth is, I never want to deal with a VC ever again. And the beauty is, I don't have to because of equity crowdfunding. The difference between equity crowdfunding and VCs, in my professional opinion, is that VCs, they want to date you forever. They want to starve you. They want to come in right when you're about to go broke, take more equity, give you less cash. I hate their model. The reason I love equity crowdfunding is because it's the polar opposite. These equity crowdfunding communities are investors that want to see these projects succeed, and they're willing to give the entrepreneurs much more favorable valuations to help them get there and to keep their interest in the businesses that they've worked so hard to build. So I could go on and on, but again, it's an exciting time. You know what? It's an exciting time, Jason, to be alive and to be in our shoes, man, because crowdfunding is still in its infancy and there's still so much growth potential. And I feel like we're just now starting to scratch that surface.
Absolutely. I first heard about equity crowdfunding in 2014. At that time, it was only for accredited investors. These opportunities then became available to everybody. In 2016, we've been running marketing campaigns for those from day one. The first day Reg CF was live, we had advertising going there. And a predictor for how much an issuer, a company issuing stock, can raise is audience size. So if you're coming from a reward crowdfund, if you have thousands of backers in many of these scenarios,
or customers,
and already
right,
thousands of
customers from e-commerce,
yeah,
that's even better.
And I look at it as a funnel where, marketing funnels, they take you from awareness, consideration, intent. There's conversion. So conversion, let's say it happens in a lead or a reservation during the test stages of a reward crowdfund campaign. Then there's another conversion of backing. Then it sounds like another conversion after that for e-commerce. If you have another marketing opportunity available to them, and now they could be a shareholder, they could be an owner in this company that we already know they're passionate about, they're enthusiastic about, they found some value in, they're probably going to want to be along for the ride. Some of these investments have $100, $500 minimums. We're usually pushing towards the higher of that range for advertising purposes, but it's somewhere in that ballpark. So if they've already purchased your product, they could put that much more in. Maybe there's a perk for them involved alongside the equity. Maybe there's not. Many campaigns, it's just the equity. But they're now part of that experience. They can say, hey, I'm an investor in this drone company or this, whatever type of product it may be. They're able to have an interest. They're able to talk about it. Maybe they bring in more investors from their friends and family, their first degree connections. Your audience can be the initial marketing tool on these equity crowdfunding campaigns.
Let's talk about that family and friends round, because a strategy that has been working repeatedly for a lot of our clients that move on to equity crowdfunding. Everyone listening, there's so many benefits to equity crowdfunding. I could go on and on and on, but just think about this one concept for a second. So all of your backers, should you have gone through Kickstarter or Indiegogo, or all of your customers that may be coming from e-commerce or Amazon or wherever else, right? You can now, when you launch your equity crowdfunding campaign on Start Engine or WeFunder, you can actually create a family and friend round where you can actually discount the valuation and offer it, position it as like a thank you, right? So let's say I run my own e-commerce business. I'm ready to go, sell some equity, raise more capital to accelerate my growth. Jason's one of my customers. He supported my Kickstarter campaign. He supported, again, through my e-commerce. He bought more product there. I can actually send an email to Jason saying, hey, Jason, I want to thank you so much for believing in us and our vision and supporting not only our crowdfunding campaign, but also continuing to buy products through our e-commerce channel. We want you to know that we're actually getting ready to value our business, and we're going to launch an equity crowdfunding campaign. And the first $250,000 that comes in, we're going to give that to our friends and family and loyal customers at a discount. Well, you know what, Jason, if he's having a good experience with my brand and my company, he's probably going to be like, you know what, I think Will's going to take this the distance. And he's probably going to reach into his pocket and buy some shares. And the beauty, too, is as a non-credited investor, you don't have to put thousands of dollars into an investment. You can put hundreds of dollars in. So it really is affordable, and it makes it easy to convert those backers or customers, consumers again. So I just want to plant that seed, because you can offer a sweetheart deal and kind of blow a kiss to your backers and consumers that have taken you the distance. So when you go on to equity crowdfunding, you can raise that first $250,000 like that. It's almost like another LaunchBoom effect. And you want to do that to obviously give the other investors on the platform confidence that it's a good deal. So if they're interested, they're more likely to convert as well.
It's that social proof. It's that validation. It's that first few hours or first day in a reward crowdfund campaign where you guys have that LaunchBoom. Same thing on equity crowdfunding, where you get out of that friends and family mode. You get out of the private setting. You're now public. You already have $250,000 there. You already have $100K, $500K. I've seen it in seven-figure levels at this point, playing towards a $5 million raise. And it's social proof. Beyond that, being able to drive traffic at that stage, we would anticipate a higher conversion rate. The portal's audience, they really don't start promoting it until you're at 100K, different levels where there's some type of sign-off, there's some type of lead investment effect that's occurring. And Will, as you were talking about, prefer all the advantages for VC to equity crowdfunding. I hear that from founders. They'll tell me, hey, our valuation, in comparison to conversations we had with VCs that wanted to just gouge us, lack of preferred terms, everything in that regard, maintaining control. Plus, as you mentioned, you already have this audience from reward crowdfunding. That audience becomes that much more valuable as the initial investments and as ambassadors. That social sharing, they could continue doing that throughout the campaign. We'll even see on equity crowdfunding campaigns, 10% to 30% of the investors participate multiple times, which means as the round's closing, they may have a bit of fear of missing out on a higher return. And being able to participate more at the closing days is very common these days. And it's just such a powerful way to then market from there. So you have all your reward crowdfunding investors. You have some of the portal sites like WeFunder, Start Engine, Republic, FINRA regulated portals that are promoting to their audience at that stage. Now you can start reaching out to investor email newsletters. Now you can start advertising to historical equity crowdfunding investors. We target them for our campaigns, can take people who've already gone through the process. They already know what they're doing. Their account information is already plugged in, and take them to your offering. And with that excitement around your company that's now created with the volume of investors that have participated, they're going to be likely to get involved. The world of retail investment has exploded in the past 12 months, past 18 months at this point. The Robinhood investors, the cryptocurrency investors, people who are, participating on the stock exchange but would love to get involved in early stage opportunities, they are watching these deals. They're subscribing to analytic platforms, and you suddenly become of interest to them. You'll see investors from all over the place on a daily basis that are getting involved. Some may reach out to you. I've seen all different types of strategic partnerships come through this as well too. And that's just one point. We're working with some groups on their second, third, one group even their fourth round, and 8 figures of funding at that point just from equity crowdfunding. There's some sentiments in the industry. Always be raising is one of them, and that is what's available. That is part of the crowd. Every company has their own path from there. Some companies look to go public, a lot of different routes, but you can take the success from your reward crowdfund campaign, the momentum from your e-commerce, and have this whole other avenue to go down from there.
Yeah, well said. Well said. I mean, there's so many reasons why I love equity crowdfunding right now, guys. And last year I invested in Start Engine. They had a round last year. They've got another round now. The reason I did that is because I think that they're going to be one of the continued leaders in the space as we continue forward. They're building like a secondary market. So let's just say you do invest in some of these earlier stage deals. After you hold that deal for a year, you can then sell it on their secondary exchange, which is mind-blowing. And that's what they're working towards building up so they can offer it to more and more, earlier stage type investments. Now you got these like early stage investors on the secondary platform buying and trading these equities, which is really cool. The other thing I love about where equity crowdfunding is going is based on my conversations with like some of the executives at like WeFunder, Start Engine, they're looking at like working towards like eventually like being able to do all the funding all the way up through IPO. So the reason that's exciting is because what's going to happen, what I bet on, is that the VC model, it's going to get harder and harder for VCs. And they're, in my opinion, the dinosaur model, right? That all people ever had access to on the entrepreneur side. And today, equity crowdfunding potentially could replace that need, which is really interesting. And I hope to see that happen.
And, there's different routes for all different companies, but I've definitely seen the value and the benefit to groups that we've worked with in equity crowdfunding and the contrast to the experience they had with VCs, as you're mentioning, Will. There are some different groups that are getting involved in equity crowdfunding, some groups that are even using it for their portfolio companies. It's a lot of exciting things happening. And as you said, it's only the beginning. The adoption rate I saw from 2016 to about 2019 was monumental. We were unsure of what was going to happen when the world was changing in 2020. We're pleasantly surprised in literally month-over-month growth up until the extension this year. And as you had mentioned, now instead of a $1.07 million cap on the most common filing, a Reg CF, it's $5 million. Had a big spike that month, and then since then, the start after that, it's been month-over-month growth as well too. It's only getting bigger. I'm looking at the numbers here for this month and how it continues to increase. There's more FINRA-regulated portals that are entering the market every day. A lot of them niche focused. There's conversations with the finance world as a whole, different banks, different groups that are already investing in entrepreneurship, different groups that are already trying to get access to early stage deals for their investors that now want in and want to be part of it. I do a lot of research, but my social feeds are just flooded with groups running advertising for different funds, different issuers, all connected with equity crowdfunding at this stage. So if you're not involved with it, I definitely recommend exploring, if not directly activating something. And as Will's mentioning here, this whole beautiful picture on how to launch a company and being able to use these tools at hand for crowdfunding to build your audience, build your initial sales, build initial publisher and marketing attention, then take it to e-commerce why stop there? Use it towards, overall investor acquisition and your next rounds for capital, and bringing on thousands of people who are physically vested into your organization to then promote to people they know and have your team grow without losing much control either. Legal and different CPAs can give you all of the different sides of it there, but it's more attractive than ever to get involved.
Yeah, Jason, I couldn't agree with you more again. And I'm just excited to do more together with your team too, Jason, because we're just seeing so much more demand on our side. And it just makes sense. The logic's there. So again, I do think that we're going to continue to see equity crowdfunding grow by leaps and bounds. Last month I did like a Google trend report just to see where WeFunder and Startup Engine were going. And they're trending super well. I mean, they're spiking hard right now in the right direction. So again, I do think that trend's going to be here to stay for a while, and mainly because it's just a smarter, better model for the entrepreneur and the investor.
And those are the most two important sides of the table. That's what I try to look at. Is okay, what is going to be of the most value to the founder, to the investor, to all the different groups involved at that. Those are discussions I have in the industry is, what obstacles are coming, how can we collaborate to make things smoother for investors, for issuers, and it really does streamline to have these tools available. And then with all the different service providers involved, being able to have the expertise, seeing things fail, restructuring different approaches so that there's a higher success rate. I mean, that's what we're playing for, is a higher success rate industry-wide. So education like this, having different thought leaders like yourself opening up and talking about what considerations to make, how to make their campaign more successful in any type of crowdfunding and any type of overall entrepreneurial growth activity, should lead to higher success rates for founders across the board.
Yeah, again, best way to explain this to everyone listening right now is the consumer has never been more powerful than they are today. Because of equity crowdfunding and new regulations that allow non-credited and credited investors the same opportunity, the consumer now is more powerful than ever. And the consumer is now the investor, which is going to be an ongoing theme as we continue to see equity crowdfunding grow and climb in the future.
Absolutely. And I'm waiting for more investor success stories. And they're happening. They will happen. But I try to picture that 5 years out of people who saying, hey, I got involved in a Start Engine campaign. Maybe it's a newer portal, a lot of different great ones coming out. And maybe they traded in the secondary market, held on to some, whatever it may be. But over time, their position became valuable, became more valuable. The company grew to be a unicorn. Maybe they hit public markets, another type of liquidity event. Whatever the path looks like, they have a huge return and feel like they made a positive impact. A lot of these investments can be categorized as impact investments, giving tech to the target audiences and the effect it has on their lives. But more success stories, I think, are going to attract ridiculous volumes of retail investors in very small windows of time. That's what resonates the most. That's what I see in the next chapters to follow. So having the consumer, have the power, having them benefit from the growth of the company beyond just the product itself and how they interact with it is, I think, we're all going to be listening to in these next rounds.
Yeah, definitely agree 100%. I do agree that it's still early, like we keep saying. And I also agree that we need a little bit more time for some of these Start Engine, WeFunder, Republic deals that have been funded recently to give them the time to leverage that capital, keep growing, and eventually have an IPO, right? And again, that could take 5 years, to your point. But I can't wait 5 years from now when we're on another podcast and we're looking at some case studies. We're like, hey, I got into this deal. For example, Start Engine. I invested in Start Engine on Start Engine last year. And if they continue on towards an IPO, I can't wait to build a case study showing like, hey, in 2020 in July, I bought this amount of shares at this price. And, 3 years later, they IPO'd and I've got like 1,000% return on that investment. Like all we need are like a handful of those stories, Jason, and that's the validation that's going to continue to send this industry skyrocketing.
Absolutely. Could be the new form of consumption. Consumers more interested in equity at that point for these early stage groups, for private offerings as a whole. And Will, there's so much great information here to take from. Appreciate all the different insights. I think it's going to be warmly received by our audience. As we wrap up here, do you have any final notes? Anything that you want to leave listeners with?
Yeah, I mean, I'll keep it simple, but if you're listening and you're thinking about crowdfunding, or you need funding, or you've got a new product you want to launch, but you're still a little hesitant or skeptical on crowdfunding, if you're looking to launch that new product for the first time, let us know. We'd be happy to walk you through exactly how to set it up for success and also to help you mitigate your risk. All you have to do is go to launchboom.com. There's like an apply button. You can give us more information and actually talk to a real person here on my team. So you can get a lot more information for free. There's no charge for any of that. If you're listening and you've got a business and you're doing well, but you need to raise more capital to continue accelerating your growth, seriously take a look at equity crowdfunding. And again, you've got Jason here, who's got a wealth of knowledge behind which platform might be best for you and your company's funding. So again, if you're listening and you're learning about crowdfunding, whether it's reward-based or equity, take advantage of it. It's here and it's going to stay, and it works better than any of the traditional models that are out there.
Well said. Well, thanks again for laying out your formulas here, your recommendations, your insights on where the industry is going and why this is so important for founders to be looking at. I'm sure it's going to be warmly received, as I mentioned. Thank you for putting out your contact info there again as well. Highly encourage everyone to get in contact with LaunchBoom and have these type of discussions. Do not pass up on that resource. I want to thank everyone for listening in here, watching as well too. We look forward to seeing you next time. Feel free to reach out with any questions, and have a good rest of the day.
Thank you, Jason.
Thanks, guys.